Hi, I'm Kep Kepner CPA here in Dallas. So, you want to sell your business. Here's a chance to cash in for all your years of hard work, and you want to sell that business. Well, the word is that the merger and acquisition world is going crazy right now. There are all kinds of activity. Now, you've got to figure out, generally with the help of somebody like your CPA, what that really means to you. You have to decide why you're really selling. And if you haven't done the job right, you're going to get a lower price for your business than you should. Let's say you want to sell your house. My former brother-in-law is selling his house. He had the realtor come out. The realtor said, "Man, you got to get rid of this 50 shag carpeting in the den." And the realtor said, "Man, you got to take that red wallpaper and you got to get rid of that and paint the room white and brighten it up." So that in itself cost my former brother-in-law, $1,000. But it probably added $10,000 to the price of the house, because everybody can recognize that maybe it's just a coat of paint, but they don't want to do the painting. So when they walk into a house and they see it's all painted and bright and cheerful, then that's going to help them get a bigger price for that house. So real estate companies hire people that are called stagers, and they come in and stage the house so it looks right, looks homey, looks lived in, whatever they're trying to accomplish for that real estate property. And that means the price can be higher. When you get ready to sell your business, you need to do the same thing. Now, unfortunately, you can't just slap a coat of paint on it. If your financial records are in poor shape and somebody comes in to buy and they say, "Well, how'd you get this number?" You say, "Well, I don't know, I just added it up," or whatever, "my bookkeeper said it," or whatever. What kind of confidence is that buyer going to have in you, the seller, and in your financial records? He's going to think that you're going to end up getting to him some way. So the fact of the matter is, it takes time to stage your business for sale. So let's say that the buyer says, "Well, how do you sell your product?" And you say, "Well, we got a salesman and he goes out in there and sells that, and I go out and help him sell, and I bring in the big clients and he brings in the little ones." The buyer's going to say, "Well, wow, that doesn't sound too good. What happens when you're gone? I've already given you all this money and you're gone, and you're the one that's getting all the big clients. That doesn't sound very good." So what if you instead said, "I have a sales force. We have a strategy to go out and get clients. These are our different revenue streams. This is how our sales force tackles those revenue streams. When we get ready to try something new, we have a program in place to assign that to a particular sales rep to see how that revenue stream works. And we document all the things that need to be done, so that even if we don't sell that customer today, we know what their needs and wants are, so we can sell them something else in the future." Well, just by doing that, you've added extreme value to your company, because the buyer doesn't have to go out and do all that. And what about the product you supply or the service? Well, how you do that? "Well, man, we're really busy. I've got a CPA practice. We're busy all the time during tax season, and I'm all the time, got to deal with the state controller on various issues for my clients, and got to contact the IRS." And if I'm a buyer for a business that operates that way, they're going to say, "Wow, there's all this detail. Who's going to do all that?" What I do in my business is all those things are documented. So number one, as the owner of my own business, I don't have to do some of those things, because there's a process, and I can assign that work to somebody. If they follow the written instructions, they can do it, and I don't have to do it, and I can know that it's done right. So if I'm a buyer coming into your business and you talk about how you design your product or how you provide your service and the strategies that you use to do all of that, you've added great value to your business. It's not about selling what you have. It's about painting a picture for what your business is and can be. And if you put too much work on the buyer after they come into your business, then they're going to want to pay a low price for that because they don't want to work that hard. They want to buy your business because that's better and easier and more financially rewarding than starting it themselves. So you got to make it easy for them. You got to have all this in place. I would always rather buy a company that was strategic in their processes, had everything documented, had really solid financial data, could answer questions in sales, in marketing, in operations, in finance, because all that information was at their fingertips. Then I would know I was getting something that had a lot of value, and I would know I wouldn't have to do all that work. So mergers and acquisitions may be hot, but there are a lot of companies out there that aren't sold for the right price because the owner didn't really stage their company for sale. If you need help with that, we can give you a hand. Thanks.